28 minutes after 6 o'clock this Monday. Let's see how the markets are going to look this week. But let's wrap things up from last week. First of all, Wayne McCurrie, market commentator, making time for us this Monday. Wayne, good to have you on eNCA again. Always good to hear from you. Let's just talk JSE for a second. Partly weaker, I'm hearing, because of US Treasury yields. Not a good week for the JSE. What was happening there, Wayne? Morning.
Well, look, I mean, the Treasury yields in America, the 10-year bond went above 5%. Now, it hasn't been there for 15-odd years. And whenever Treasury yields go up, equity markets go down, because obviously it becomes a far more viable investment alternative for people looking at buying equity. I mean, if you can get over 5% in America on bonds, money will go into that rather than to go into shares. So it's always a negative influence on shares. But the whole markets were affected worldwide. I mean, the US markets were down between 2 and 3% on the week, and we were more or less the same.
Let's talk gold and Brent crude for a moment. We've got it on screen for our viewers as well. 3-month highs for gold, and then Brent crude, I'm afraid, still moving in the wrong direction for us, those of us who are worried about the fuel. Let's start with gold first. Wayne, why is that going up? I imagine Middle East as well.
Yes, it's exactly the same story. Gold has gone up roughly 3 or 4% last week on the back of the heightened tensions in the Middle East. And Brent crude's doing exactly the same thing. I mean, even though these are not, obviously the countries involved here are not oil producing countries, but it could destabilize the whole region, especially if the conflict widens, which we sincerely hope it doesn't. But Brent crude is going up. I mean, it got up to almost 100 a couple of weeks ago. Then it fell back nicely, back to 85. But unfortunately, since then, it's been going up again.
Do you think there's a chance we could break through that 95 barrier again? Because there's two barriers, isn't there? There's 95 US dollar, and then there's the 100 US dollar. You think we're going to get anywhere near 95 before year's end?
Look, we could very easily do it. I sincerely hope not. But of course, if the tensions escalate, then it will go up. If the tensions lessen, it'll go back down again, because the actual market fundamentals for oil are not good. Same as at the moment, they're not good for any commodity. So this is, you can almost argue, a political price on oil. And in the shorter term, especially when you come to the Middle East and conflict, I mean, quite frankly, anything could happen. So it's quite possible it goes up. I sincerely hope not. But I mean, as I said, anything can happen.
Anything can happen. Let's talk about the rand as well. Let's bring that up for viewers this morning as well. The rand almost going up and recovering in line, or arguably with oil at the moment. So where we've got 18.39, well below that $19 mark, unless that indicator is wrong. The euro 19.45, the pound 22.34. But what are we watching on the US dollar here? What are we watching rand dollar?
Well, I wish the rand was 18.39. The indicator is wrong. It's probably close to 19. But still, despite all of that, and despite all the heightened tensions and the US Treasury yield going above 5%, the rand's actually been relatively stable. Thank goodness for that. You know, it's been sitting around the 19 level, which is a very, very cheap level. I mean, over time, the rand is worth substantially more than that. But unfortunately, we are in a commodity down cycle, and have been for a while, and whenever that happens, the rand weakens. So I would expect the rand to stay at more or less the 1850 to 1920, 1930 type of range. But on a 2 to 3 year view, as long as we get interest rate cuts and the world's economy improves, the rand could strengthen quite materially over that time period. But in the shorter term, we're going to have to live with this weaker rand, I think.
Yeah, Wayne, 100% correct. Sorry, that graphic wasn't correct there. It was not 1863 or whatever it was. I almost had a heart attack. Everyone at home having a mild hernia. It's 1906. It wasn't that volatile a weekend. Can we get some business news as well? Tiger Brands. It's always so important we watch what they do, considering their importance in the economic landscape. They've got a new boss in charge, new CEO. Are we seeing many changes afoot, do you think, Wayne?
Look, Tiger Brands is in a very difficult position, the same as any primary food producer, the chicken companies, the fish companies, and quite a few other companies in the same field as Tiger Brands. It's really been tough. Honestly, the input costs have been going up quicker than what they can pass the margin on. The consumers in a very poor position. As we all know, interest rates are high. So it's a very negative environment for the primary food producers. And the margins have just been squashed. So Tiger Brands obviously came to an agreement with their previous CEO, and they parted on mutually acceptable terms. And it was quite interesting to see what the actual commentary was. It said that the company needs a new direction. So obviously there may be some plans afoot to change the company. It's going to be difficult. I mean, maybe they'll do a bit of restructuring. However, they still remain, a primary food producer. They've got lots of fast-moving consumer goods, well-known brands. But the downturn in the fortunes of the company comes from its staples business, and that you can't change overnight.
No, you certainly can't. And one thing that you can't change overnight as well is the impact on the NHI. Wayne, I had a chance to speak to Dr. Ryan Noach last year, the outgoing Discovery Health CEO. He's moving off into the entrepreneurial side. But with 15 years of experience, how big a player Discovery Health is, and we're trying to have these discussions around the NHI, and they would have been a massive player. Some are saying it's not a good time for these talks to be taking place off the back of Ryan leaving. And there's issues with the RAF, Road Accident Fund, as well. So how do you see both of those playing out this week?
Well, look, we all know about NHI. It's at the moment, it's pure politics. At the moment, the government is pushing through, or let's push through the NHI bill, and we're going to hear lots of stories about NHI before the elections next year as to how they're progressing. Is because, as I said, it's actually a political thing. Practically, NHI is a decade off, if not more, before it actually starts making a major impact in the market. So I don't think we're going to be too concerned about it right now. But obviously, Discovery, with their chief leaving, is not good at this particular juncture.